That said, since we're getting a lot of results that are coming in, let's welcome the first management, Minda Corp. They posted actually a rather strong showing in the fourth quarter, record quarterly revenue as well as margin expansion, despite higher input costs. Mr. Ajay Agarwal, the President of Finance and Strategy at Minda Corp, joins us on the show. Hi, Mr. Agarwal. Good morning. Good to see you in. Congratulations first. Good set of numbers. The street likes it. Post your numbers. I think the stock has rallied 8 to around 9% or thereabouts, telling you that the street likes what they saw. Let's look ahead, though. Input costs have spiked up. How much of the impact will we see in the first quarter? And will it be that in the second quarter we'll see a larger increase because input costs have gone up? There is some supply disruption as well. So give us some clarity on that front.
Thank you so much for having us on your channel. Yes, input costs are increasing. And thankfully, the way our industry functions, most of our input costs, whether it is commodity or non-commodity, is generally bypassed to the OEMs and to the automobile companies. So while we will see a little bit of margin pressure because of the denominator and numerator factor, but overall, we don't expect from our balance sheet point of view to have any kind of impact on escalation in commodity or any other input cost price.
All right. So you don't see any impact on your input cost price, and you are on track for your margins to reach about 12.5% by FY30. That's correct, right?
Yes, we are targeting that, and I think our trajectory is well planned to achieve that stated target.
Right. You know, as I speak, I'm curious to know what's written on the whiteboard behind, because a lot of that appears to be Japanese script. And that brings me to the question, the Toyo Denso joint venture that you've made, right? What's the kind of total addressable market that you foresee here? And what's your own estimate of revenue contribution from this over the next 3 to 5 years? What's the kind of margin this business has?
Yeah, so just to correct you, it's written in Taiwan and not in Japanese.
Got that. Not that we understand either, sir.
You are right. Had it been Chinese also, we would not have been able to understand. Now, to answer your question, yes, we are extremely proud with the joint venture which we have signed with Toyo Denso last year. I think the progress on putting up the factory, coming up with the facilities on track. We expect the first SOP to start towards the Q4 of this fiscal year and ramp up to happen the next fiscal year.
Okay, all right. And you're saying Toyo Denso, this JV, the market opportunity size is 10,000 crores or thereabouts. What kind of number will you be looking at, say, in the next 3 to 5 years from now?
From a full-scale point of view, we are targeting, close to about anywhere between 600 to 700 crore revenue out of this joint venture up till 2030. And thereafter, we will see how do we, take a larger market share from other OEMs.
Okay. I had one question with regard to this JV that you're merging with the entity, Minda Vast, I think so. Did, I think, revenues of close to around 500 crores in the past year and margins of around 7%. So give us some clarity on this. What will be the dilution of this particular, merging this smaller entity into the parent company? And what does it take the promoter holding? What was the holding structure over there in that entity?
So it was a 50-50. And just to correct you, we are not looking at either merging ourselves or merging Minda Vast with Minda Corporation.
Okay.
We have amended the shareholder agreement. This is the first amendment which we carried out in consultation with our joint venture partner. Okay. Due to amendment in the joint venture agreement, it has helped us to consolidate the result of Minda Vast into Minda Corporation. So that's the only technical change has taken place, which will allow us to add close to about 500-600 crore of top line. And, it is targeting to deliver anywhere between 8 to 9% of EBITDA. So that those two numbers will get consolidated.
Till now, you were not consolidating it. It was coming as... So now it goes to above 50%. Is that correct?
The shareholding ratio remains the same. However, because of the amendment in the shareholder agreement, it allows us to consolidate the result into Minda Corporation.
But that does not make any more change than cosmetic, right? Because then you will have to remove what is not your share on that already. Earlier, what was done a below-the-line item, now comes on top of the line. So what was the rationale for doing this?
The rationale was clearly to look at how do we get better control over the operations of the company as well as on the management, to also to ensure that this company gets consolidated into Minda Corporation.
I mean, better control you could have...
Otherwise, you are right that, it was only the profit was getting added in our profit after tax line item. Now we will see a line-by-line consolidation into Minda Corporation.
Yeah, but then, I mean, I'm not sure whether just financial consolidation would change the way you control that business in any way, right? I'm just trying to think of it from a business operations standpoint. You amended the shareholder agreement and now you're consolidating it line by line as against just the profits coming in earlier. When I ask you the rationale, you're saying that it will give you better operational control. Can you explain how it will give you
For example, should the party do not want to continue the joint venture, we have certain preemptive rights where we will be able to take control of the company. That's not the idea. That's not what we are thinking of doing it. Nonetheless, the idea was primarily to see how we can consolidate the Minda Vast business into Minda Corporation.
Understand that. So does that change your long-term 2030 guidance, or this is just a way that, you get more sure of the 2030 guidance? Because earlier, I'm not sure whether this was factored into the guidance that you had given of 17,500 crores on the top line.
No, your understanding is correct. It was always part of our 2030 guidelines, including the consolidation of Minda Vast.
All right. And you also had a plan of making an acquisition, a 500 to 700 crore rupee acquisition, to further boost that, to further accelerate your boost towards that 17,500 crore mark. If you could give us a sense on where that is, and also give us a sense on, how your realization per vehicle is likely to be over the next few years. You've given us a higher share of revenue coming in from PVs by 2030. What is the glide path to that number?
So if you look at, PV contributes about 14-15% today. With Minda Vast consolidation, it will contribute about 20-21%. And with other product, which is the pipeline, we are looking at how do we take the market share, or at least from a group consolidated point of view, up to 25%. That's the guidance we have given to the market to reach 25% passenger vehicle revenue coming up to 2030.
All right. And exports is a relatively smaller part of your business. Growth you're guiding for year, and have there been disruptions in the last 45 days?
We have not seen, any kind of change or any kind of disruption. And, if you look at this year, export contribute about 10%. And long-term guidance also, if you look at, we said by 2030, from current 550 crore, by 2030, this number should triple up to 1,500 crore by way of an export.
Take that point. Thanks a lot. Always a pleasure speaking with you. You've given us clarity on a whole host of questions that we had. Wish you good luck for the future and your 2030 guidance as well. With that,